Bill Baruch joins us. All right, we've got two big stories here. We've got the great news on the jobs, and we've got this chaos on that floor of the House of Representatives in Washington, D.C. I think the market's paying attention to the jobs report and is ignoring chaos. What say you?
Yeah, it's Friday, and Fridays have been very friendly to the market. That's nothing new. And this was, like you said, it's a Goldilocks jobs report. It shows that there was growth in the economy, jobs added, manufacturing was terrific. And guess what? Wage growth didn't surge. There's no real new inflation fears. We do have CPI next week. But at this point, it was the fear that we could see stagflations or signs of it with big surge in wage growth and no job growth at all. But that wasn't the case. So it keeps the party going, and the momentum that came from the Fed meeting is going. And by the way, the Fed, they call it a taper. It's barely a taper. They came out there and cut those trim purchases going forward. But at the same time, you have the U.S. Treasury, they're issuing less debt here in the fourth quarter as well by almost an equal amount. And the Fed's balance sheet expanded by $100 billion since the end of September. So this is a party that just keeps on going like a rocket ship now.
I don't want to get technical, Bill, but can you explain why it is that the yield on the 10-year Treasury has fallen all the way down to 1.47 today? Can you explain it?
It was a dovish taper. It was about as dovish as it gets. And I think what we saw on Wednesday from the Fed was ultimately that Fed Chair Powell in the committee, they really fear a moment like Q4 2018, and they're not going to make that mistake again. And it's, the stakes are even higher now. The stakes are higher because you have everybody, that from the top down moving to a larger demographic that is reliant on higher stock prices right now for spending, and we're heading into the holiday season. So I think the Fed was extremely dovish. And then, even though there isn't real progress right now in Washington, but the fact that there is talks makes you think that, there's not going to be a debt ceiling issue again in a month or now. And that right there is a little bit of underpinning to the bond market.
It sure looks like a year-end melt-up to me. Bill Baruch, thank you for joining us. We appreciate it.